Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, we now have a better idea how the Americans are going to tackle their surging inflation problem. The US Fed has raised its policy rate by 75 basis points to 1.75% in a strong lean against their inflation threat. It is the largest increase by them since 1994, but it is not as strong as it could have been. They said they're strongly committed to returning inflation to its 2% objective, which, given that inflation is now at 8.6%, is now a long way off and will require a lot more than a 75 basis point hike. So they've begun quantitative tightening on an unprecedented scale. Their dot plot is now at 3.5% for later this year, so another 175 basis points of rises are likely coming over the coming 4 reviews in 2022. But then up only another 25 basis points in 2023 before slipping back to 3.5% policy rate in 2024. The bottom line is that they themselves see a very high policy rate for the next 2 years plus. And they've also baked in expectations that this will slow the expansion of the American economy and raise their jobless rate. Meanwhile, American retail sales are up 8.1% from year-ago levels, but actually slipped marginally and unexpectedly in May from April. The near-term culprit is weak vehicle sales. The annual increase barely matches inflation. Across the Pacific, China's retail trade fell by 6.7% in May from the same month last year, compared with a market expectation of a 7.1% fall, and after an 11% drop in April, which was incidentally the steepest decrease since March 2020. This May data is the third straight month of falling retail trade there. And Australian consumer confidence is now falling towards historic lows as inflation bites harder there, and the RBA seems very late to implementing any meaningful resolve. Also getting worse is the electricity situation on their eastern seaboard. Their regulator has suspended the spot market and it now requires all operators to run even at a loss to keep the lights on. It will keep getting uglier there. And the new Australian government has summoned business and industry leaders to witness formalising its campaign pledge to reduce emissions by 43% over 2005 levels by 2030, just 8 years away. And the US Treasury 10-year yield will start today down 14 basis points from this time yesterday at 3.36% after the Fed moves. And the price of gold is up $23 in New York, now at $1,834 an ounce. And oil prices fell sharply in the US after the Fed news, and they're down from this time yesterday by $4 to just over $113 a barrel in the US, while the international Brent price is now just on $116.50 a barrel. And the Kiwi dollar will open today firmer at just on 62.7 US cents. It rose overnight but slipped after the Fed, but has since risen strongly in the circumstances. Against the Australian dollar, we're a half a cent lower at 89.8 Australian cents because their firming against the US dollar was more. Against the euro, we're back up a half a cent to 60.1 euro cents. That all means our trade-weighted index starts today at just under 70.6 and up 60 basis points since this time yesterday. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.